Welcome to Mortgages by Sherry. In today's episode, we will be discussing the first-time home buyer. Hopefully, if you're watching this video, you're entertaining buying your very first home. And there's a couple of key elements you need to know before you start venturing out and shopping for a house. There's three key items that lenders look for when evaluating a first-time home buyer. And these are just three of the basics. There's a lot more to it than this, but the basics start here, and that's where I want to focus. We look at your credit history, your employment history, and where you've lived for the last 2 years. These are all looked at over a 24-month period. Credit scores are determined by the credit bureaus, and they look at how you've held your credit in the last recent months. The more current credit plays the bigger weight on your score. So payments that have been made timely for the last 12 months will have more effect on your rate than credit that was maybe 2-3 years ago, 4 or 5 years ago. The older the credit, the less impact it has. Knowing your score is a big part of mortgage lending. It's important to either get with a loan officer and get pre-qualified, or pull your own credit on the internet and look at it and make sure it's accurate. Accuracy is the number one thing. Not all loans require a score, but your score is a driving factor on how your rate will be priced. So while FHA does not have a score requirement, you may end up paying a higher rate due to your score. So it's important to get a look at your credit and get some consultation on it. And I can assist you with that if you would visit my website at www.sherrybradley.com. Again, that's www.sherrybradley.com. For credit information. I can get your credit pulled and get you in the right direction. Second aspect we want to look at is your employment history. We want to know where you've been for the last 2 years on working. It doesn't have to be in the same line of work, but we are looking for stability in job. Now some of you are thinking, oh, I'm right out of college, so I really haven't had time to have a job for 2 years. Well, what we look for there is we'll look at your educational background. If you were getting some kind of trade degree, or if you were in college and then you pursued an employment career in the field in which you were getting educated, then your education will count as your 2-year history. So not to discourage anyone who has just recently gone to work for the first time, you can still apply for a loan and be approved for a loan. Another thing we're looking at with employment is the actual amount that you earn, so that we can run what we call ratios. Underwriters are looking for your what we call a front end and a back end ratio. Your front end ratio is basically your mortgage payment that we come up with divided by your monthly income. And your back ratio is your new monthly mortgage payment plus all your recurring debts, car loans, credit cards, student loans, all that. We add all that together and divide that by your monthly income. So these two ratios are very important. They need to be at certain levels. They don't want them to exceed. I think the max you're probably looking at is anywhere from 41. FHA likes a 41, and conventional loans like somewhere around a 40. So it's important to know where you stand. Typical rule of thumb would be to take your gross earnings for the year and multiply that by 2.5 times. That would give you a good starting point for a base loan amount. So for instance, if you make 40 grand a year and you multiply that by 2.5 times, that puts you start qualifying at a $100,000 loan. That's where we start. If you don't have any recurring debts, we can push that up a little. Residency. We want to know where you've lived for the last 2 years, mainly to get rental history and to see what you've actually paid in rent. That will signal to an underwriter that if you're paying $750 in rent now, then a mortgage payment of $800 probably won't be that big of a shock to you. If you live rent-free and now your new mortgage payment's going to put you at $1,000 a month in rent and mortgage, that is going to set off a red flag with the underwriter. They're going to want to know how you plan on handling the shock of the new mortgage payment. I hope this information has been helpful for you. If you have any further questions, please visit my website at www.sherrybradley.com. Again, that's www.sherrybradley.com. Thanks for watching. I'm Sherry Bradley.